All right, what up, tycoons? What up, traders? How's it going? We're looking at BNGO, okay? BNGO. This is Bionano Genomics, up 16% recently. Had a very big rally. It was up about 20% at the highs, and I took advantage of that. Okay, we'll go over the strategies that I'm using, what I think is in store for it, and where we can go either to the upside or the downside. All right, we take a look here at the 50K portfolio. All right, and we can see we have bingo shares in here. I got a couple hundred shares. And I actually just added to this position here recently. And it was nice. Okay, I happened to get in right before this very big rally, and we can see I'm up about 11% on the overall position. One way to take advantage of this massive rally, right? What I did was I went ahead and sold some call options on it. All right, and we can look here, all right, at my wheel strategy. And currently I'm running the wheel on Bingo, BNGO. Probably going to sell some more options here soon on some other stocks in the portfolio. But if you see here, I sold the covered call to 4, okay, at the January 2023 expiration date. Was able to collect about $17 in premium. If you think of how many shares that is, that's about $8 per contract, or about 8 shares per contract, right? If I wanted to go buy back in and add to that position. But really, I'm just looking to stack up some cash. And then I'm selling cash secured puts on it. I'm selling the 1.5 strike for November 18th. So meaning, if bingo was to go down to 1.5 or below on November 18th, I'd be forced to buy 100 shares of bingo. My average cost basis is above that. It's above $2. So I wouldn't mind purchasing for a longer term if it falls to 1.5. And then, the 4 right here, I'm very happy to sell all of my bingo shares if bingo is up at $4 or higher on January 20th of 2023. That would mean that, I'm nearly over 100% on the play. And, nothing wrong there with selling that. So I'm very happy with the covered calls and the cash secured puts I got on it. Okay. If you're new to the channel, all right, I have this nice portfolio right here, and you guys can see what stuff I'm adding and getting out of. It breaks down the whole portfolio breakdown, what sectors, what assets I have, and gives a really good insight into what I'm looking at. All right, so enough of that. We'll go into the chart now, and the things that I'm looking at on the upside. Right, we had this very massive move to the upside. We've came down really hard. Nothing goes up or down in a straight line. What you do is you retrace, right? So I'm using the Fibonacci retracement tool, and I'm giving myself some valid levels, right? So if we come down and retrace and come up higher, the 38.2, the 50%, and the 61.8 are very valid levels that the chart is going to be attracted to, that the stock price is going to be attracted to if it wants to continue pushing higher. All right. But what we have right here forming, and I'll zoom in a little bit more on it, we have a rising wedge pattern forming, right? And it's indicated by these trend lines right here, okay? This is actually a bearish chart pattern. And what happens is you're going to see the price action zigzag in between here until we break this bottom trend line. And once we do, we're going to most likely come back down to $1.76. And if we continue heading lower than $1.76, I have $1.58 and $1.35 as the support levels down below that the stock is going to be attracted to, okay? $2, really $2.01 is that key make or break level. That is our 61.8% retracement level from the recent lows up to the highs. If it comes down, bounces off this level, things are still looking good. But if we come down, try to bounce and break through this level, then, the most likely this wedge is going to play out, right? So let's say that this wedge doesn't play out and it gets negated or voided, right? And we break out, we make new highs, and we cancel out this pattern to the upside. Okay, the price targets are 275, 306, and 336. Now, biotech has been seen as a little bit of a defensive play when it comes to institutions and what Wall Street is thinking, and they've held up pretty well just as a sector compared to the rest of the stock market, especially tech and advertising related companies. Those have been getting punished a lot. You look at Google's earnings, they're down big. That's going to drag the market down. That's most likely going to drag bingo down. But it doesn't mean that this thing can't stay bullish. So I do have a position in there. Still going to be holding it. Plan to hold for a while. But I'm just going to see what happens as this develop. If this wedge breaks through, Okay, we're coming down to $1.76. Again, if we break that $1.76, we have $1.58. And that's going to be right around those cash secured puts that I sold to buy 100 shares at $1.50 or below. So in essence, I'm just trying to get paid to buy the shares that I want to buy at a cheaper price. And I'm trying to get paid to sell the shares of companies that I want in profit, right? And so that's the reason that you run the wheel strategy. And if you like that, then go ahead and watch this video here, breaking down, the dividend portfolio and wheel portfolio.